Supported housing, the £3 billion gap that nobody's talking about. This is specialised supported housing investments, and this is your insight into this good new investment strategy. The yield contrast, buy-to-let versus specialised supported housing. Buy-to-let yields might around 4% after Section 24 tax charges. Specialised supported housing pays £330 per unit per week on government-backed leases. It's inflation-linked rent on a 15-year full repairing and insuring lease versus the volatile buy-to-let market. So buy-to-let investors face an increasingly hostile environment. Section 24 tax changes have eroded their yields and their profit, and it's down to about 4%, rising interest rates, and then we've got the Renters' Rights Act as well, which move the balance of power in favour of the tenant rather than the landlord. Specialised supported housing operates on an entirely different model. It's government-backed enhanced housing benefit, funds £330 per unit per week, paid directly and reliably. Leases run for 15 years on full repairing and insuring terms with inflation-linked rent reviews every year built in up to 4% per annum. The income is not adjusted to local housing allowance caps. The tenant risk is absorbed by the care provider, registered care provider, who is the leaseholder, not the investor. The result is a fundamentally different risk-return profile, one that most property investors have never been introduced to. The £3 billion gap, the supply shortage that nobody's talking about, £3 billion shortfall in specialised supported housing supply. Few investors or developers are addressing this critical gap. Vulnerable tenants are left without adequate supported housing options. The opportunity. The UK faces a staggering £3 billion supply shortage in specialised supported housing across the whole country. Despite rising demand from vulnerable adults requiring tailored housing with support, the development pipeline remains officially underfunded and overlooked. Local authorities are struggling to place individuals in compliant SSH, while the investment community remains largely unaware of the sector. This gap represents both a social crisis and a significant government-backed investment opportunity for those willing to look beyond traditional buy-to-let. With an aging population and increasing pressure on social care, the shortage is projected to widen, making early mover advantage a compelling proposition for informed investors. What exactly is specialised supported housing, SSH? It provides purpose-built accommodation to vulnerable adults who require tailored support services, that's care provision on a visiting basis, but crucially not medical or clinical care. Residents typically include those with learning disabilities, mental health conditions, or physical disabilities who need an adapted living environment with on-site support staff. SSH is distinct from care homes in planning classification, funding mechanism and investment structure. It falls under a different regulatory framework, attracting enhanced housing benefit from the Department of Work and Pensions rather than standard residential or care home funding routes. This distinction is fundamental to understanding the returns and the risk profile available to investors. So the key features are housing with support, not medical or clinical care, different planning class from care homes, so this is use class C3B, funded via enhanced housing benefits from the Department of Work and Pensions, and it's 15-year full repairing and insuring leases with inflation-linked rent. How SSH money flows in. Department of Work and Pensions enhanced benefit funds enhanced housing benefit are exempt from local housing authority caps. Local authorities and care providers, authorities identify need, care providers hold head lease. Investors, fixed inflation linked rent, fixed weekly rent on a 15-year full repairing and insuring government backed lease, and that is subject to annual increases for cost of living index up to 4%. So, Department of Work and Pensions, funding the foundation of this housing model, allocates sufficient benefit for the number of residents in a particular block or registered location. The enhanced rate is fully exempt from local housing authority caps, and the government-backed payments provide a stable, above-market income stream. Why it matters. The Department for Work and Pensions is the conversion of the cornerstone of the SSH funding model. Unlike standard buy-to-let, when rent depends on market conditions and tenant affordability, SSH income flows directly from a government department. DWP allocates enhanced housing benefit at rates significantly above standard LHA caps. This exemption is critical. It means investors receive above market rents that are not subject to the rent controls or benefit caps that affect conventional residential landlords. Because payments originate from DWP and are administered through local authorities, the income stream carries the effective backing of the UK government. This fundamentally changes the risk profile compared to private market rents, offering product predictability and resilience across economic cycles. For SSH investors, understanding the funding origin is essential to appreciate why the returns are both higher and more secure than conventional residential property. Local authorities, they assess and identify tenant recipients in their area, tenant clients. They administer the housing benefit payments on behalf of the Department of Work and Pensions. They maintain oversight of housing standards and compliance. Their role, local authorities are at the heart of the SSH ecosystem. They assess and identify the housing needs of vulnerable individuals within their area, matching tenants to appropriate supported housing. Acting on behalf of the Department for Work and Pensions, they administer enhanced housing benefit payments directly to care providers. This administrative function ensures that government funding reaches the right tenants efficiently. Local authorities also maintain oversight of housing standards and compliance, providing an additional layer of accountability. Their involvement gives the SSH model its public sector backing, reinforcing the stability and security of the income stream for investors throughout the lease term. Step 3, care providers. The registered care provider holds the head lease directly with the developer. They manage tenants and they deliver tailored care support services. Their operational role fully separates them from investor responsibilities. The care provider's role is the operational backbone of the specialised supported housing model. They enter into a head lease agreement directly with the property developer, taking on full responsibility for the building and its occupants. Once the lease is in place, care providers source and manage vulnerable tenants, delivering the tailored support services required under the SSH framework. This includes day-to-day care coordination, compliance with regulatory standards, and maintaining the property to full repairing and insuring standards. Critically, the operational separation means investors have no direct involvement in tenant management or care delivery. The care provider absorbs that completely, while the investor receives fixed inflation-linked rent regardless of occupancy fluctuations, so there's no void risk for the investor. The structure is what makes the SSH attractive. The care provider's lease obligation to the investor remains in force independently of the care provider own income from the housing benefit. Step 4, investors' rent and lease structure. Investors in specialised supported housing receive a fixed inflation-based rent paid weekly, providing a predictable government-backed income stream that is largely insulated from market volatility. Leases are structured as 15-year full repairing and insuring FRI agreements, meaning the care provider as head leaseholder is responsible for all maintenance and insurance costs, not the investor. This structure delivers long-term massive income with the minimal management burden, making SSH a compelling alternative to traditional buy-to-let for serious investors seeking stable, above-market returns. So the key investor benefits are fixed inflation-linked rent, that's up to 4% increase per annum based on the cost of living index, 15-year full repairing and insuring lease security, £330 per unit per week, irrespective of whether the unit is occupied or not. That's the responsibility of the care provider. And this is government-backed income stream from the Department of Work and Pensions. Enhanced housing benefit. Why enhanced housing benefit changes everything? It's paid at higher rates, fully exempt from local authority housing allowance caps. Paid at higher rates, delivers reliable above-market rent unaffected by standard rent controls. Its government-backed income stream provides consistent inflation-linked returns. So the key advantage is standard housing benefit is capped by local authority housing allowance, LHA allowance rates, limiting the landlord income across the private rented sector. Enhanced housing benefit allocated by the Department of Work and Pensions for specialised supported housing operates entirely outside those caps. The exemption means SSH investors receive rents significantly above market rates, typically £330 per unit per week, regardless of local LHA limits. Unlike conventional buy-to-let, income is not subject to rent control pressures or market fluctuations. The result, a government-backed, inflation-linked income stream that outperforms traditional residential property investment by a considerable margin, with the security of a 15-year full repairing and insuring lease underpinning every payment. Honest risk assessment, planning risk factors. Local authority planning policies vary significantly, but each local authority issues a letter of support for each scheme. So the SSH sometimes makes you into a partner of the local authority because you're helping to provide them with development that they actually require and underwrite. Planning delays can impact project timescales, however, refusals can affect projected investor returns. But risk mitigation planning risk is one of the most significant considerations in SSH investment. Because local authorities interpret planning classifications differently, what is approved in one borough may have resistance in another. SSH projects can be caught between residential and care home classifications, creating uncertainty. Engaging experienced planning consultants early, conducting pre-application discussions with local authorities and selecting sites in areas with demonstrated SSH need can substantially reduce planning exposure and project timescales. Construction risk. Key construction risk. Build quality issues can reduce the long-term asset value. Cost overrun roads projected investment returns. Delivery delays defer rental income start date. And inexperienced contractors can increase exposure to all the above risks. So managing construction risks, you need to engage experienced contractors and to manage them using JCT contract and the appropriate project manager or employer's agent, and take the usual project controls into account for every project. Regulatory risk, key risk factors, shifting government benefit policy rules, changes to housing benefit eligibility, regulatory reclassification risk, and mitigation via robust full repairing and insuring lease contracts. Risk mitigation, regulatory risk is real but manageable. Changes to government policies or benefit rules could impact income streams, particularly if enhanced housing benefit rates are revised or eligibility criteria changed. The key mitigation is a well-structured 15-year full repairing and insuring lease with a reputable care provider. Contractual obligations protect investor income even during policy transitions. Due diligence on cost on care provider covenant strength and lease terms is essential before committing capital. Auditing the sector, not selling it. Our commitment: full transparency, no sales pitch. Informed decision making first. Realistic expectations always. Independent sector analysis. We're here to audit and understand the sector, not to sell you a project. As a chartered construction manager and founder of Alpus Group, I pride myself on integrity in dealing with clients and giving honest and precise feedback about every situation. What's next? Coming up next, in the next video, Alan breaks down the real numbers, detailed side-by-side financial comparison of SSH and traditional buy-to-let. No spin, no sales pitch, just honest figures so you can make an informed decision. Follow the series to go deeper into the SSH opportunity and understand exactly how the returns, risks, and structures compare. So the next video covers the SSH versus buy-to-let real yield comparison, side-by-side net return analysis, risk-adjusted income breakdown, and following the census for full insight. Thank you for watching this presentation. If you'd like to comment about it, then feel free to do so in the box below this video. Don't forget to like it if you enjoyed the video, and subscribe to our channel to stay informed about specialized supported housing and other advanced investment strategies. Here's my contact number should you wish to contact me: 07539 141 257. From outside the UK, that's +44 7539 141 257. You can schedule a call with me at calendly.com/AlanJE, or you can drop me an email at alan@alpusgroup.com.